it's okay to be correlated in up markets, but it's important not to be correlated in down markets. Can you expand a little bit, perhaps lessons learned from LGT Capital, and also tell us about what works and what doesn't?
Sure, and thanks for having me also here on this great panel in this unique location. So in terms of what we see as attractive or what works, I would second what was mentioned also in the previous panel in the sense of active management is back to some degree, because we have seen since COVID, volatility and dispersion has picked up, and we believe that this creates a lot of opportunities. Systematic strategies have done pretty well over that time, be it on the macro side, be it on the quant equity side. And we believe that that will continue to be the case if we see still an uncertain environment with bouts of volatility, but still sort of underlying shifts. But maybe to add another element, like this place, it has kind of a retro feel, but it's still very cool in this time. And we talk about AI, but it's still valid. And we believe still there's some strategies which are maybe also classic strategies, which still have a place today and which are actually quite attractive. So for example, we see ILS or reinsurance markets is kind of attractive at the moment. Had a pretty difficult period from 2017 to 2022. Since then, we still see sort of a lot of catastrophe events in the world, and insured losses are going to be again, over 100 billion this year. But we believe that from an investor perspective, a lot of things have improved. And actually the rates going forward look quite attractive, and it's an uncorrelated return source. So that's something that we like. Also, convertible bonds, for example, also classic hedge fund strategies has seen a lot of shake-up. The index level returns haven't been that great. But when you kind of dig deeper into it, we believe that from the concentration of that segment, there's a few players who are actually in a very good position to sort of earn structural premia from kind of exchanges, as companies don't want to have their sort of convertible bonds mature, and also from new issuance, which is sort of picking up after the slump. So we see many areas where we like it, and also on the healthcare side, I would second that in the sense we have seen kind of sort of the slump in 21, 22, and now we have this resurgence as a potential opportunity. For us, we don't try to sort of bet on that on a beta way, but we would rather look for specialists who are able to earn money from sort of this higher dispersion, but then also have the ability, if biotech is sort of coming back, to sort of dip a bit into that without having a huge tilt in that direction.